Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video, I have the privilege of showing you some of the stuff that I've been working on around earnings. It just happened to be a good day to show these because we've got a couple that really line up well with what you're looking for from these particular strategies. So the first that I'm reviewing with you here is Tesla. You can see here where the extended session has begun and the cash session ended by that last white print there. So essentially what we're looking at is just the idea that Tesla has traded a wide range after the initial report, but overall it's fairly mixed. A big part of what I try to tie into these, or to tie into this analysis, is based off of the proprietary study set that we use from the Voodoo lines, and I continue to find that these are extremely helpful. Now if you come over and look at it here in Thinkorswim, where I have these that I'm working with, you can see where that level comes in here at 232.86, and based off of that, that is primarily what I was looking for to hold as resistance. The best thing I can show you about this is the contrast between an unbalanced butterfly versus a short call spread. Because if I was sitting here with just a short call spread, you know, you'd kind of be sweating it a little bit because it's getting in here and approaching your strike prices. So you can see right here we've initiated this against the short 232. If you just had that as a short call spread, it's a little close for comfort. But what you're trying to do with these unbalanced flies is it's kind of like the price is right. You want to be as close to this price as you can without going over. We're trying to maintain the intrinsic value of the 227 while still selling the premium of that 232 half. The strike here at 237 half is simply to help maintain the risk in the spread, but this is a contract too that technically we would like to see it expire worthless. So what is the maximum profit on this spread? Well, it is $2.50 wide, and we took in $1 credit on the initiation of it. So if the underlying were to pin at 232 half, and I don't think it's going to happen precisely, but just for the sake of discussion, if it were to happen exactly, the spread could end up being a $3.50 winner. Now, of course, if it explodes higher, we do have $4 worth of risk, but this is a pretty good example of how you'd like to see those trades work out. A few more that we are looking at. We've got Trip that is also reported, and these guys are all over the place, you know, after hours. When I looked at that Tesla idea, that was a little bit more of a directional bet. When you look at Trip, this is something where you trade it. I would say that this is a mix, somewhere between doing something like an iron condor, where with the iron condor, you're trying to sell a contract that is outside of the expected move. Well, we closed at 64.50. Or excuse me, we closed closer to 70. That's the current asking price. But we closed the day closer to 70. We had about a $5 or $6 expected move. So you're using a short call that is outside that range. If we were to explode higher and move right up into 75, that's where the spread matures the best. If it goes above 76 cents, then we do have 90 cents of risk. But with it trading at 64, this is essentially a scratch trade. We will cover our commissions. We didn't have to take any heat on it to speak of. And it's just one more example of how these spreads can work. Now, I got filled in one of these others, and this last one was here in First Solar. So for this particular example, you know, we kind of went over the analysis in the chat room as we were doing it live, but this is a very similar situation where you're utilizing a spread that takes in a short 48 put. As long as we're trading above 49, we'll make a quarter on it. If it'll trade down into 48, that's where that maximizes itself. And then if it were to just get hammered, well, then we would have 75 cents of risk in that spread. So that's how the earnings trades are looking as of now. That's what we initiated into the end of the day. And anytime you can look at 3 different examples of the same type of strategy, that usually really helps it click. So that's what I've got going on today. One last thing I wanted to make sure that you are aware of is that Carolyn will be going over a class here on the strategy portion of it will be on Saturday, July 30th, and they're also going to be doing some live trading with Bruce on it the week after. So Carolyn's timing work is something that has been completely priceless to me. I think it's probably one of the best things I've ever added into my trading. It does have some nuances that are very important to learn, but if it's something you're interested in, I think this will be a great opportunity to get a good feel for it. So if you like that, I hope to see you there. Otherwise, we'll touch base at the next free video.